Imagine this: markets flashing green and red across 100 screens, traders reacting in seconds, and somewhere behind it all, a quiet network of code watching every move. That network belongs to Aifeex, and inside it lives a human-assisted AI system trained to read markets the way meteorologists read weather. It doesn't gamble. It observes, learns, and adjusts. As 2025's post-halving volatility shakes the crypto world, this machine isn't panicking. It's collecting data, refining predictions, and preparing to execute its next cycle of trades with surgical precision. Welcome back to the channel. Today we're stepping inside the Aifeex mind. If you're new here, hit that subscribe button because this is where we separate the signal from the noise. Everyone talks about artificial intelligence in trading, but few understand how a supervised system like Aifeex actually operates in the real market. This isn't an autonomous robot guessing prices. It's a living collaboration between algorithmic logic and human intuition. At the heart of the system is what the developers call the adaptive feedback core. Every trade the AI proposes is reviewed by analysts who understand behavioral finance, people who look beyond charts into human psychology. The AI tracks millions of micro-signals, liquidity inflows, CEX depth metrics, sentiment shifts on social media, and volatility clusters following large Bitcoin movements. Humans then guide it, weighting the variables that matter most during specific conditions. In short, the AI learns faster, but it learns responsibly. Since the 2025 halving, Bitcoin dominance has swung between 52% and 58%. Most altcoins either lag or spike unpredictably. The Aifeex system doesn't chase either side. Instead, it measures correlation decay, how quickly altcoins break away from Bitcoin's rhythm, and recalibrates exposure. When dominance rises, it hedges. When liquidity rotates to AI-themed assets, it tilts long. This disciplined rebalancing is why the portfolio volatility has remained roughly one-third lower than comparable DeFi indexes this quarter. What truly sets Aifeex apart is its approach to probability stacking. Rather than predicting one outcome, it builds a distribution of likely events and assigns capital according to statistical confidence. Human analysts monitor these distributions daily, adjusting bias based on macro news, regulatory developments, and even weekend liquidity shifts. It's a hybrid ecosystem. Code provides speed, humans provide context. Picture a late Friday market. Volumes thin, spreads widen, and retail traders expect calm. Inside the Aifeex terminal, however, alerts trigger. The AI has noticed an abnormal divergence between perpetual funding rates and on-chain exchange flows, a classic sign of over-leveraged long positions. Within seconds, analysts approve a risk-off rotation. While most of the market sleeps through the weekend, Aifeex quietly cuts exposure and waits. By Monday, when liquidations hit, the system buys back at a discount. That isn't luck, that's supervised machine discipline. Another edge lies in how Aifeex treats information. Most algorithms simply read candles. Aifeex reads narratives. It scrapes data from thousands of articles, Telegram posts, and X, formerly Twitter, threads, converting text into numeric sentiment scores. Human curators review anomalies, sudden optimism around low-cap coins, political headlines affecting dollar liquidity, or AI sector hype cycles. Each observation updates the sentiment module, which then feeds the trading engine. The result is an evolving model that doesn't just follow numbers. It interprets emotion, the most unpredictable variable in markets. Now let's talk results. In Q1 2025, the crypto market saw record volatility, yet the Aifeex trading clusters maintained positive monthly returns in 10 of 12 tracked pairs. More importantly, drawdowns were shallow. That consistency attracts liquidity partners because exchanges value predictable order flow. It's also why major Tier 1 CX platforms have started analyzing Aifeex performance data behind the scenes. They're not just looking at price, they're studying stability. The human-assisted AI model proves that disciplined automation can coexist with regulatory transparency. Inside the command hub, analysts describe the workflow as symbiosis. The AI handles microsecond decisions. Humans oversee macro reasoning. When geopolitical events hit, a surprise rate cut, new SEC rulings, or Asia session liquidation cascades, the human layer temporarily throttles automation, letting discretion take control. Then, once volatility normalizes, automation resumes with updated learning weights. This design prevents the common failure mode seen in purely autonomous bots, panic trading during black swan events. But here's the strategic beauty. Every pause becomes new data. When humans override the system, the AI logs those interventions and retrains around them, learning why humans stepped in. Over time, it begins to anticipate such events on its own, not by copying emotion, but by modeling probability through previous human decisions. That feedback loop means each trading cycle is smarter than the last. From a market impact standpoint, this learning curve has real consequences. As the AI refines risk assessment, its execution quality improves. Slippage decreases, spreads tighten, and counterparty exposure drops. These metrics matter to liquidity providers who value efficiency over hype. That's why Aifeex's internal data shows rising engagement from mid-sized funds seeking algorithmic routing partnerships. They're attracted by a system that adapts without overreacting, a rare trait in crypto. Another often ignored dimension is ethics. The AFX framework includes human compliance checkpoints. Every AI-generated trade must pass a transparency filter verifying that it meets anti-wash trading and market integrity standards. Exchanges reviewing potential partnerships cite this as a differentiator, a trading AI that respects both speed and fairness. In an industry still recovering from trust deficits after 2022 to 2023 scandals, that credibility becomes currency. Zoom out to investor psychology. Retail traders fear machines replacing them, but the AFX model reframes that fear. The AI doesn't eliminate humans, it amplifies them. Think of it as an exoskeleton for trading, extending reach, not replacing instinct. When you combine computational power with human oversight, the result isn't chaos, it's clarity. That's what long-term holders care about, consistent logic in a market driven by emotion. As we approach the next market cycle, institutions are watching these results closely. The AI-assisted approach could become the new benchmark for DeFi integrated asset management. If adoption widens, liquidity depth for AFX-linked instruments will expand, reinforcing price stability. And when that happens, perception shifts from speculative token to infrastructure asset. So what does this mean for investors today? It means patience will be rewarded. Each model iteration compounds knowledge, just like compound interest. While retail traders chase headlines, the AFX brain keeps building statistical memory, learning from every false breakout, every flash crash, every news-driven pump. When volatility returns, it won't guess, it will remember. That is the quiet power behind the upcoming market phase. If you're still here watching, you're part of the minority who study before they act. So make sure you're subscribed, because in upcoming videos we'll analyze the transition phase once AFX's AI trading clusters connect directly with exchange liquidity pools, a moment that could redefine algorithmic finance altogether. To wrap this up, understand this. Artificial intelligence isn't the future of trading, intelligent collaboration is. AFX demonstrates that technology guided by human insight can outperform raw automation. Every chart, every algorithm, every correction is part of a living system that gets sharper with every decision. And as market complexity grows through 2025, that fusion of code and cognition might be the only sustainable edge left. So stay informed, stay analytical, and stay ahead. Because the next time you see a sudden move in the markets, remember, somewhere behind that candle, the AFX brain is already adapting. Hit subscribe, join the Telegram community link below, and keep watching the evolution unfold in real time.